So I'm going to wear a different hat today, though. I'm going to wear a nonprofit hat in my capacity with Acción USA. Acción USA, we're one of the leading nonprofit lending intermediaries, and let me just explain that. We receive loans from banking institutions to then on lend to businesses, communities, and areas where folks can't access the capital from a traditional lender. We work with many, many banks. Citizens actually is a very big investor in us. And we work across primarily the East Coast. We have offices in New York, Boston, Miami, and Atlanta. But what I wanted to bring up is what makes nonprofit lenders like ourselves, because there are many of them, different. And I think the first thing you have to think about is the nonprofit nature itself sets us apart from other lenders. Why? Because we're mission-led, meaning we're looking to grow your business because of the impact that you're making in that community. We're kind of looking at a double bottom line. The reason we're lending to you as an entrepreneur and taking the risk that financial institutions won't is that we believe in the services you're providing, we believe in the impact that you're going to create through employment, and that has a positive halo effect in terms of economic development, which is really what we're focused on. The second thing is, because we come from a credit perspective, we actually care about educating you about your credit. The third thing is, as a nonprofit, we're not here like you heard about the mortgage originators trying to do more loans just to make a bigger commission and to make more income. If we do more loans, no one in the organization benefits from that. It's a nonprofit, meaning nobody owns the organization. It's capital and money that's held in the trust of the state because of the charitable purpose that we're focused on. So we really care about you as an individual, you as a business person, and that means that many times we'll tell you, look, this doesn't make sense. And I think that's important when you look at partners. I wanted to just spend, because I heard in the earlier panel people giving a few words of advice, I wanted to just share a few for you to think about. One was already mentioned earlier, which is know thyself, meaning you really have to understand your business and whether or not you are a profitable business, meaning on paper your income and your expenses generate something, versus cash flow negative or have a cash flow issue. And there's a big difference. We have a lot of people that come to me and say, oh, we don't have enough money. And when you look at it, oftentimes it's just a timing difference, which is, as was referred to earlier, really a working capital issue, which is fine. That's what you need money to do, to bridge you from today until you get the payment on the contract, etc. There are other folks, though, that are actually, actually underwater, and that's a situation that no one can help you. You have to help yourself get out of that, because since we're providing a loan, the idea is the cash flows was going to repay the loan, and if you don't have it. So know thyself. Know yourself before you go in to talk to any lender, whether it's nonprofit or others. The second thing I would say as a strategy, and I think it's become particularly poignant now, is you need to look at nonprofit lenders as another area of potential financing. In fact, you should look at all financing opportunities as kind of a toolbox that you may draw from, because each institution, like each person in the world, is different. And even on this panel, we have traditional lending sources via banks. We have more receivable type financing through what we just described. There are also asset lenders that will look at vehicles or equipment or copiers and provide you some lease financing. We are a lender. We focus mainly on cash flow. And our risk tolerances across any institution are all different. For ourselves, because most of our referrals come from banking institution, we start with those that couldn't get money from the bank. So you can tell that our risk tolerance is going to be much higher. You need to understand that, because if you don't have a rich tool set to go to, depending on your financial situation, you're limiting options for yourself, and you don't need to do that. The third thing I would say is, in this environment, there are a lot of folks that talk about growth, which is important, but there aren't enough people talking about the things you need to do from maybe even innovation or investment in yourself just to keep your business going. And what do I mean? We've had a lot of clients come to us seeking capital. We do anything from $500 to help people establish credit, up to 50,000. So that's why we're called a micro lender. We do small loans. But what do people do with this? What we have is we have folks that come if they're in a bar or a barber. They're beginning to buy flat screen TVs. So, you know, the men's barber that people go to, all of a sudden they're upgrading a few screens. And why are they doing that? They're doing that because it differentiates themselves from all the other barbers that people go to. Presumably can help you on the price increase, which the action coach I think mentioned earlier. You know, if you go to a place and it's nicer, well, you might pay a little bit more. Other examples, I have folks that do deliveries. So they're taking their trucks, and instead of buying a new truck to grow their business, they're actually doing something different. They're investing in refrigeration of their trucks. Why? Because now if they were delivering goods that didn't spoil, now they can do cakes and other high-end items, weddings, and other events where the fee for those type of deliveries and those cakes and things are much more valuable. Again, it's an investment in your own business. It will hopefully yield to growth, but even if it doesn't, it can diversify your revenue source and at least stabilize your organization or your business, and that's important this time as well. The fourth thing was mentioned in the previous panel, but technology. Now, the prior panelists spoke about social media. I'm just going to speak about the web. And I'm going to give you an old, non-online business, a barbershop. And we have a client named Barber21. This is actually a client in Atlanta, where he said to himself, he had a little shop. It was in a nice area of Atlanta, and he was trying to grow his business. And he thought about it and he said, you know, I want to try something different. He put his barbershop online, and what he did was he set up appointments. So that if you're busy, you could actually reserve an appointment online, and he actually honored those appointments. So over time, what he did is that his customer base that used to be within a 5-10 block radius now became the greater part of Atlanta, because people that had no time to waste needed to schedule an appointment and needed to get their haircut, and they had to, and, you know, a lot of guys want to be in and out. They wanted to know that they could get there and be done. It's grown his business. He calls himself 21 Barbers because he wants to eventually set up 21 barbershops. But my point is, this simple online tool, which now after knowing about this, I wonder why everyone doesn't do this. But it's a simple example of technology. And then the final point, which is where I started, is not only do you have to understand different types of lenders and capital providers within a category, you need to understand the spectrum. And if you're very early stage, you're looking for more equity type of investments, or even the family, you know, roll out the hat version. And as you get more formalized, more established, longer track record, you get to the more traditional continuum of bank. You need to understand that continuum, and if you don't, go to a small business development center, go to any of the many organizations that help you and educate you about that, because there are many, many options. Thank you very much.